Are you ready? Because, boy, the news is out that it is officially a bear market. And I think when we take a look at the charts, you're going to see clear evidence that the bears do not take the stairs, right? The bull takes the stairs, and boy, you're going to see pretty clearly, I think, what they mean by when they say the bears go out the window, right? So, with that said, let's talk briefly about what trade we're putting on today. Remember, it comes from tastytrade.com. Head on over, link in the description, to sign up, not with me, but with Tasty Trade to get their email newsletter with trade ideas. I put those on in a simulated account for those of you that are new, and you can do the same along with me, and we can test out the theory of how to trade options. So we're going to be looking to put a trade on today in a volatility product today. So we're going to look at a few things in volatility. Right after, of course, we look at the futures and how things have been trading overnight. So with that said, let's head on into the platform. So here we are. We're in a simulated trading account. And we can see that things have taken a nasty turn yesterday here, particularly in Southwest Airlines. Ouch. All right, let's see. We've got 22 days left. We might be rolling that. When I say might, almost certainly going to be rolling that probably tomorrow, and we'll see what happens there. But over here, I've got my market watch list with my futures. We can see how things have been going. Crude oil's down almost another 5%. The S&P is down almost 5% again, on top of yesterday's 5% drop almost. All right. Yeah. So what's, of course, shocking is to see gold down. All right. Naturally, NASDAQ and these guys are almost, they're very correlated here with S&Ps, down a similar percentage. All right, so with that said, with the market going down, let's take a quick look at the chart for the S&Ps, and I think you're going to see what I mean here. So we have the S&P futures here, and we can see the bull run that everybody keeps talking about. That's only for the past year, of course. And then you see the cliff that the bear jumped off. But I want you to take a look at, okay, so anyway, if you're prone to or inclined for technical analysis, you could see here that we're down today, well past anywhere in this past year's level of what someone would call support. So we have to go out in time to see when might the, most recent level of support be, or I should say resistance. Let's go down to the 3-year and weekly chart. And now we can see back the past 3 years. And it's pretty dramatic here. A bull taking the stairs, right? And then the bear going out the window. Okay. Almost the same thing back here about 2 years ago. December 2018, that time frame, we saw quite a big drop. And you can see how the big drop happens in a very narrow time span, right? So, just in case you were wondering, yikes, right? That's why the the velocity of money here. Wow, right? Whew. Lots of volume happening that day. All right. Anyway, so let's take a look at a couple more charts here. When the market, you'll see here, comes down like this, well, let's take a look at what the volatility does. Let's switch back to the 1 year. And let's take a look at the VIX. Okay, right about the same time frame, what happens? Volatility goes skyrocketing. Okay, and we can see we're at 62, right? Look at that. That's 62, 63. That is definitely a spike. And notice where the VIX tends to hang out, right? So, if anything, what we ought to be doing, if we're in the tasty trade approach, of course, is, be contrarian. So another volatility product that's going to be suggested for our trade today is the VXX. Okay. It doesn't look exactly the same as the VIX, all right, but it does have and has had a big spike, right? So we're going to be putting on a contrarian play, a vertical spread we're going to be doing of course, a short call spread, right? So with that said, let's take a look at the Analyze tab, simulated trade. We're in the VIX. We're going to go to the April expiration with 36 days to expiration. And we're going to go not to the put side like we've been doing a lot, right? Selling puts, trying to be bulls in a bear market now. We're going to be looking at give me a moment. We're looking at the 42 call and long the 44 call. Okay. That doesn't seem right, does it? Let's take a look at, yeah. So, bid ask last. So it's gapped. Compared to the Tasty trade and the numbers that I'm seeing right now, the Cherry Bomb trade, I think we would need to adjust this. So, here's what we're going to do. We're going to work on the fly here. %. 42.44. It looks like we're going to end up doing this guy here. So a bid, I know this is a little bit against the rules here, right? I mean, we've been just kind of following the Cherry Bomb trades here, but fairly certain we don't want to be selling something that has intrinsic value already. We want to be selling extrinsic value only, right? So with that being said, and the fact that we're seeing these bid-ask spreads, the market here at 38.6, I'm thinking we're going to do, since it was a $2 wide spread, we're going to do the same thing, but we're going to just move the strikes up to similar probabilities. Yeah, this guy here and this one. So we're going to do short the 46. And of course, I don't want to do it like that. I want to right click the bid on the 46 and choose Analyze Sell Trade, go to vertical. It's going to give me a $1 wide spread, but I want to make that a $2 wide spread. So the long will be the 48, the short will be the 46. And we can see that was probably why. We have an 8-cent credit spread. That's not going to work. Let's try their numbers and see what we got. 42 and 44. 68 cents. Yeah. Okay. Let's take a look at the risk profile. Set it to expiration in April. Price slices to break even. Yeah, see, this is not setting up very well. See, I'm wrestling with this trade. This is me learning right now, and I'm totally going to put this on YouTube so you can see me struggling, because that's how that goes. Not an expert, right? Wow, okay. So let's take that to the next strike. 43, 45. Yeah. So the credit that you receive drops dramatically. Okay. I don't think that this is a trade that we need to put on. So that maybe we'll call this a lesson in whether or not you need to put the trade on. You don't need to trade. I'm conflicted. Here I am. Let me go on screen here. I'm conflicted. What do I do here, right? Do I put the trade on just to see, all right, hey, what if we put a bad trade on? What if we put on a trade that looks like it, maybe we fell asleep at the wheel and we didn't pay attention to mechanics? You know what? I think that's what I'll do. That's what I'll do. Because this is simulated trading, right? We're not risking any real money, which, could be seen as a positive or negative here. I think it's all about the learning. So let's put on a trade that maybe wasn't, set up the way we should, and let's see how it goes. All right. So let's do exactly what the trade says, 42.44. Okay, now it's showing a 40-cent credit. That's crazy. 42. 44. Right. Okay. Yeah. Okay. There it is. Let's do this trade. I'm going to do this trade, and let's see how it works out. The probabilities are against us on this trade. See how that goes. All right. So this has been a learning experience. A little bit. I think the real learning is going to happen when we see what happens with this trade. Will we get filled? Will we take a a full loss? Because hey, look, the overnight trading is showing that the market's going to go down, which looks like that means volatility will continue to go up. It's a learning experience. Have fun. I hope that you enjoyed watching me struggle, and I'll see you in the next cherry bomb tomorrow, which will hopefully go a lot smoother. Thanks for tuning in.